Hey everybody. So in today's video, what we're going to do is a trading strategy that involves one indicator that can be used for short-term entries and contra trades. The indicator is the 50-day EMA or exponential moving average. As always, subscribe to the channel and hit notifications so that you know when we release more videos more often. One of the comments I'm getting a lot, Eric actually asked this, what is the best way to use moving averages for trading? So I think that's best to define what we're going to go over today. So what we're going to really hit on is what is a moving average, the types of moving averages, how the EMA is actually calculated very briefly, what asset classes these strategies that we're going to go over can be used for, how to put the EMA in your charting software properly, and also, let me hammer a point home. There's not a be-all, end-all system as we get into this. In other words, you're going to want to use this with some of the other lessons from the other videos. So you're going to want to focus on that, okay? And you're going to use them after confirmation of price actions established. And we're going to talk about how to do that. But we're going to have to really just start diving into it. So the very first thing is, just for those that are not aware, what is a moving average? Okay, and I'm going to give you just a general definition so you can have an understanding. It's a technical indicator that market analysts and investors may be used to determine the direction of a trend. So they take data points, they put those data points together, and then they divide those by the number of days. That's how they come up with it. There are two main types of moving averages. There are SMAs and there are EMAs. Now, SMAs are a simple moving average, okay? And it's the easiest one really to construct. And it's simply the average of the stock over a period of time. Very simple, okay? An EMA, there's a calculation involved. And EMA moving averages, they're designed to give weighting to the importance of recent price data. And it's important for you to understand this as what these differences are. So essentially what they do is take the SMA and then they put a multiplier to it, and that gives you what the EMA is. Why it's important to understand this is that multiplier changes the longer that you go out. So in other words, if you're doing this out for, let's just say, 10 days, okay, the multiplier is based upon the equation, which is really just 2 divided by the selected time period plus 1, is going to give you, roughly 18%, okay? But if you go out and you do it on the 50-day, it's going to give you 3.9%. And it's just important to understand that that's the differentiation in weighting. And that's one of the reasons why for short-term trades that you may want to use EMA versus SMA, especially in these examples that we're going to go over. So in regards to what asset classes that you can use this for, it's very simple. You can use this for any asset class. So you could use this for crypto. You could use this for Forex. You could use this for equities, bonds, options, futures. And you can use this across the board and with other strategies that you implement. Again, this is one tool. And we're going to show how to use this tool, but we're going to show how to use it through a couple different ways, but really through price action. That's going to be our focal point. Price action and some of the other lessons that we've already gone over. So we're going to focus on that today. So one of the ways to utilize this is to get a basic understanding of how things are going. In other words, are we in a bullish market, a bearish market, or a flat market? Now, for those that aren't aware, I'm just going to explain this out very clearly. For those that have this system, I'm using TrendSpider, but if you don't have TrendSpider, okay, if I took this EMA off, and let's just say that I have another moving average on here, like the 50-day, simple moving average. All you have to do is click on Properties, go over here to Exponential Moving Average, click on Exponential Moving Average, click Apply, and then simply click on these 3 dots and change this 50. Now that that's in, all I have to do is click off this simple. Now, that's how you set it up. Now, let's just talk about what's in front of us right now, okay? This is an example using Tesla. I'm going to use real examples of real trades that you could have done. I know a lot of other videos don't do that. They try to give this timeless appearance. It is timeless because this is all based upon human nature, but I find that most people learn better when they focus exactly on situations or scenarios that they've seen happen. It's how I learned, and I think it's how you'll be able to learn a little bit better as well. So let's just take a look at this, okay? And this is Tesla. Now, the simple guide to an EMA or the 50-day EMA is this. If you are trading above the 50-day, okay, you are in a position where you are bullish, okay? If you're in a position where you are below it, it is considered bearish. Okay, if you're in a position where you're bouncing around on both sides of it, it's really just considered, sideways action. And you can see that pretty clearly here, how you just found yourself in a range up and over until it finally picked which way it was going to go. So you can see how you could do that. And we just pick another example. Let's take this. Okay, so this is bookings. So you can see how riding this gives you that sideways action. But once you make a determination, and there's obviously other factors involved there that we're going to get into, you can see once you make that determination how this becomes bullish and how it can actually be utilized as a support level. Okay? And then you can see how it becomes bearish once you break that level. All right, so you can see how you could use this to determine if a stock is bullish, if a stock is trading sideways, or if a stock is trading bearish. Now, there are two ways to utilize this. Okay, the first way that we're going to go over is simply trend trading. The second way is going to be contra trading, or what is referred to as reversal trading. But we're going to start with real live examples of trend trading. As we do this, I just want to stress again, you need to confirm this with price action through candlestick patterns, trend lines, and support and resistance. The more points that you can overlay, the higher degree of probability that the trade is going to work. So let's go through a couple of examples on how you can use this trading strategy. So very simply in front of us is bookings. Now, if we expand this up, we see clearly how we popped over this line and closed over it up here with a closing price on December 21st of 2368.94, roughly. Okay? So what we're going to do by that is that gives us a signal that, hey, this may be a trade that we want to put on. What we want to look for are other signs that there might be a signal. So what we're going to do is just overlay a couple things. We're going to look at this bar and then determine based upon this bar and this candlestick and how it fits here to see if we have some kind of pattern that makes sense. And if we look at this, we can kind of identify this reversal. Now, the first thing that we're going to utilize, and this is coming from previous videos, we know that this is a resistance spot because of this right here. So we know that this is a resistance spot, okay? So we have flipped resistance to support. You can actually see the next day how you came below it, right, and actually almost retested it. So we know that that's there. Now, the second portion is, that's not the only one that we could see by looking here, right? So if we look clearly, we can see another one pretty clearly here. And let's just draw this up to exactly where we are, okay? So you can see, let's just pull that back just a little bit. Okay, so you can see how you're bonking right here on the 50-day and that level, here and here, okay? And how you stopped right here. So while that might not be the best spot or the optimal spot to buy it here, this is a spot where you can put the trade on. And you're putting the trade on based upon breaking this level, which is a current resistance level that was flipped to support, okay, even though you're sitting right on this key level. Now, we are going to get into this in a moment on how you could define this even faster and how you could even have gotten a better price. We're going to get into that in a moment. Right now, I just want to understand you to understand the concepts. We're above the EMA. We are above the support line. It was resistance. It is now support. okay? So based upon that, you could look at this and say, okay, based upon these moves and this close, because we need the close on the daily for confirmation, I can put this trade on, okay? So in this example, we're using our knowledge of support and resistance lines, the fact that we are over the EMA, the 50-day EMA, okay? And then based upon that, we are putting that trade on. Now, let's go through a couple more examples. So, this is Expedia. So, you're going to see a very simple setup here. Now, this is much cleaner. You can see very clearly the bonking level, or what I refer to really as resistance, and you can see that pretty clearly in here, right? Now, you've broken this day above your 50-day EMA, but you see this right here? You don't really have confirmation. You're just in no man's land. Maybe you could say that you have the gap fill, as we've discussed in previous videos, but what you're really looking for is you're really looking for close and confirmation, okay? Once you're over this level. So again, in this particular pattern, there are some signs here from us that understand candlestick patterns, as we went through those other videos, where we know very firmly that this is a bullish engulfing trigger. Okay, so based upon this bullish engulfing and this trigger bar, now we're above the 50-day EMA, and now we're above resistance, and it's flipped to support. Okay, now we have even more data points, right? We have 1, 2, 3. Okay, in the other example, we really had 2 data points, and this one we have 3. This is Tesla. Okay, and we all saw this, and we all saw how it moved recently. And here's your 50-day EMA. Here's the red bar, and you can see this bearish engulfing right here. You can see this reversal here, and then your gap, and then your go. Now, what you need to look for here is the same, okay? You're looking at your neckline, and you can see it right here as you're sitting right on these spots, just like we showed in that support and resistance video. Now, when you flip, you're flipping directly over the 50-day right here, but you're running right into resistance, right into the neckline. And you can see this. You can even see that this is kind of like a wonky, head and shoulders. So you have an issue here, and you're at the neckline. So you could see why you may have a rejection at that spot. Now, that's not what happened. We got the close, and we got confirmation because we got over this line. So in this example as well, based upon what we just went through, you could see that if you're waiting for confirmation, you're actually up here when you're buying. We're going to get into a minute how we're going to really sharpen those price points. But if you focus on this wedge line, you can see how you can start putting these pieces together, right? You're breaking a wedge line, so now you have 1 data point. This is actually a reversal pattern right here, okay? So there's a second data point. Third data point is that we are now above the 50 EMA. Fifth data point is now you're above your neckline resistance, and you're over here, and this is telling you that you have the ability to enter because you confirmed. So in those examples, you can see pretty clearly how you can put all these pieces together to utilize this and build all of this off of the 50-day EMA. And again, we're using the 50-day EMA and we're stating it for short-term trades. I want to be clear about that because in future videos, you're going to see why you would use the 50-day SMA instead if you're looking longer term. Now that we know how you're supposed to use this and how you're supposed to use the other pieces from the other video, let's talk about how we can actually refine this process to even get into a better entry point. And the way to do that is to look at candlesticks within candlesticks. Now, what does that mean? Okay, so we all know that the stock market is open regularly from 9:30 to 4. So we all know that we are open less than 8 hours. Okay, based upon that, you will see some people come out and say use 4-hour charts or use 2-hour charts. The issue with that is you're better off using a 2-hour chart if you're going to use a 4-hour chart, because you're only going to get one full data point from that day. It's not going to work as well, okay? Frankly, when you look at multiple time frames, which we're about to do, you should be looking at the hourly, okay? By focusing on the hourly, you're going to be able to drill into this a lot better and be a lot cleaner. And I'm going to give you an example here of exactly what I mean. So we can see here clearly that we're over the line and that we're over the 1016 line that's right here. So we can see in these two charts how this lines up. Now, to make this clean, I'm just going to go here. We're going to click off that 50-day. And now we're just going to focus on this for a moment. So we want confirmation. So let's talk about what we have over here for a moment. We have the trend line break, we have the reversal pattern on the candlestick, we have the 50 EMA that we flipped, and then we flipped the neckline, okay? And then we obviously went. But confirmation is the close, and understand this point. Confirmation is the close of the bar. Until the bar closes, you do not have confirmation of a pattern. And I'm just going to say that again. Until a bar closes, you do not have confirmation of a pattern. So we want to get in and get the best price. Here's the neckline. We're waiting for that neckline to break. This bar right here, let's click off of this. This bar right here, this flip, okay, this close, gets us in at 1031, give you an exact number, 1031.48 versus waiting until 1067. Okay, now understand that this bar right here is made up of all these bars. So everything that happened on the 23rd, let's get to this, just the 23rd, okay? Everything that happened from the 23rd over is this bar right here, okay? So essentially what you're doing is you're looking at the internals of a daily bar when you move into a smaller time frame. So you can see in this example how this could have saved you by utilizing this strategy. After identifying all those other points, you could see how this could have saved you roughly $40 in an entry price, which is exactly what you're trying to do. As an investor, you're always looking for an edge. You're always looking to save inches, okay? It all adds up. So by doing this and waiting for confirmation for that bar to close, this got you in at a cheaper price. Now I just want to go through a couple more examples so that we fully grasp this concept, because it's an important one. So here we are in the daily. Here we are in the hourly. You can see how we have broken here on the 21st, okay, and closed over this. Now, this gets interesting because this is going to be up to the individual. Again, no two traders trade the same, and those that try to trade exactly like other people are doomed to fail, period. You need to develop your own style and take what you're learning through either these videos or other videos that are actually credible and make your own style with what we're talking about. And I'm going to give you an example of this, okay? So here you are on the 21st. Now, here you are on the 21st. Now, you can see clearly that we are above this. We have this reversal pattern down here. We could technically even talk about how this is a failed H pattern that we've gone over several times in previous videos. And you can see now that you've got the gap up and you're going and you're over your line. Some people, based upon that, will use this multiple time frame trading strategy and use the price action and just enter here. And they'll go on the premise of that 172 and they'll watch the next bar and they'll see if they can get through that level. That's one way that you could utilize this strategy to get ahead. It's more aggressive, okay, and it has a higher degree of failure. Does it work? Yes, and it worked perfectly in this example. Does it always work? No. Does it work less than waiting for confirmation of multiple data points of confirmation? Yes. So now that you're up and over this close, that's confirmation. Now, what's beautiful about this example is you can see the test of the neckline. So that tells you everything that you need to know. right? Because now you've retested where you're at and you can see these. And then you can see the follow through. Let's just do one more so we make sure that we actually grasp this concept. So this is bookings. Now, this is fairly interesting because as you're going to see, the first bar took you right into the neckline. But let's just walk through it step by step again. So we could just say that this is one big H, right? We could see that pattern, that failed H pattern that we've gone over previously. We can see how we are above the 50-day EMA, okay? And we can see this bar and the gap. So in order for this to even trigger, you need to be at roughly 2303 for all of the confluences that we just gave to be intact, right? So hopefully we grasp that concept. If we don't, please in the comments let me know now that we're having issues with that so that I know how to explain it in better detail in future videos. Now, as you push up on the hourly, this hourly takes you right into what? Okay, this hourly takes you right into the 23, 25, 80 resistance points that's right here. Now, by taking us right to this neckline, that puts us in a position where we're right against our resistance. This point right here on the hourly. So the next bar, the next hour, is down here. So again, we don't have confirmation. You're right on a resistance point. So it's probably best to wait for that to clear. Once we wait for that to clear, we wait for this bar. Once this bar pops over that line, it's a start. It's not confirmation. Confirmation is the actual close above the bar. So you can see in this example that you would be able to get in here roughly at 23.45. Okay, and if you line this one up, okay, you can see that that would have saved you from getting in at 23.65 or saved you roughly 20 points. Okay, again, we're always fighting for inches. We're always trying to get an edge, and we're always trying to do better on every single trade. That's how we perform better. So you may want to review this a couple times because what we've gone over is fairly in depth. So you may want to watch the video a couple times. Just to reiterate, there's no system out there that is 100% perfect. What I've given you is I've given you a system that will lead to high probability entries, okay? And if you utilize this system with some of the other previous videos, you're going to find that your entries are going to do significantly better. Okay, now we're going to get into the other side of this. We're going to get into the contra trading or reversal trading as it's referred to. Before we continue, if you want to see more videos more often, make sure you hit the thumbs up button and please show support for the channel. I appreciate it. Comment below now while it's fresh in your mind and let me know what your comments are about how far we've gotten and what questions you have now. It helps me with future videos and it helps me get better at educating. So the next topic we're going to dive into right now is what I refer to as contra trading, reversal trading. And the purpose of this is to understand when you should be getting out of a position or whether you should be shorting a position. And this question actually came to me from Olivia. When is a good spot to short a stock? Very simply, the best time to short a stock or to exit a stock is the beginning of a trend reversal. And what we're about to go over is going to show you clearly how you can utilize this for trend reversals. So in this example, you can clearly see from here that you're in an uptrend. We can all see that uptrend. We can all see that we're above the 50 EMA, and we can all see that we're above an uptrend. Okay. When that uptrend breaks, that is the first sign that we may have an issue. Okay. The confirmation that the trend has changed is the close below the 50-day EMA for short-term trading. And I want to reiterate short-term again. So what our confirmation is that the trend has changed is the close below the 50-day EMA. Okay. This is your close right here. Okay, so that is the first spot or the first indication that you may want to put on a short trade or exit your trade. Now, what else you're going to utilize? You're going to utilize your trend line, and the break of the trend line is going to give you another data point. You're going to utilize this 23.6672 level and see if you break that level. Okay, you might want to wait for that to happen. You might not want to wait for that to happen. This depends on you and how you trade. Reiterate again, everybody trades differently. Everyone has different risk tolerance. And what's up to you as a trader and an investor is to figure out who you are. Okay, these are simply tools in a toolbox that will add a degree, or in my opinion, significantly increase degrees of probability of entering or shorting or exiting reversal trades at the right time. And in this example, you can clearly see that up here was a much better time to exit the position. But the next day, if you were to do that and wait for confirmation, it's going to take you down to your resistance level, and maybe you don't want to do that and deal with this. So it puts you in a situation where you have to determine how much you're going to take. Now, once you see this break and the break of the trend line, we can do the exact same scenario that we did on the entries. So what we can do is look at this on two charts and multiple time frames. Okay, and this may help us make a decision whether or not we should do that trade now, or whether or not we should do that trade a little further down the line. So as you can clearly see on November 15th, and let's just open this up a little bit and zoom in. So here we are, and here's the trend line. So we can all see that. So the first hour bar broke the trend line and broke the 50-day. And you can see how that fits perfectly into this. So what does that mean? Let's just look at it again. Okay, so what does that mean? Well, let's blow this up a little bit and get into it. So what's interesting about this is by using this multiple time frame and wanting to put a short position on, this trade looks completely different now, because we're using the top of this. Let's just say we're going to use the top of that and close over the top of that as confirmation that the trade is wrong, and that's going to be our exit strategy. Okay, if we short here, we're shorting at 24.2855. Okay, now you're shorting $75, roughly $75 above your support level. So that actually gets you in a better position to see if this is going to break and gives you more of an edge, right? Because you're always looking for an edge. 24.27, okay, and then if you look at the high of this bar, 24.63. So you can quantify your risk versus return there, which we've done in previous videos and walk through it. I plan on doing a more intense one on risk versus return if there's interest. So what you're seeing is once that happens, you break down, and now you just continually go down. And all this is doing is just confirming all over the place. And then you can just utilize this to make sure that your trade's right, and just look at your trend, and you can clearly see how you're doing. Now, that's how to utilize the different time frames to get in a little bit better, okay, after you have confirmation of your key factors. In this case, you would have had, there's really three key factors here. This is a candlestick pattern referred to very commonly as three black crows. 1, 2, 3. It's not rocket science why it's called that. This is confirmation of the trade. This is the break of the trend line. Here's the break of this level. And instead of waiting for this close here, we were able to get in a little bit quicker because we looked at candlesticks within candlesticks, which is what multiple time frames actually are. So let's just review this a couple more times and take a look at Expedia and see if we could find something on Expedia that would give us an example. So this is pretty clear, and I'm just going to walk through this one. So what you're going to see here, here's your trend line right here. Okay, so you already know that you have an issue with the trend line. You're coming up, you're testing, you're not breaking. You have this little shooting star here, and then you reverse below that shooting star, and you close right here. So now you have your trend line, your reversal through the shooting star, down, and now here's your close, 166. Now, let's just look at this date very cleanly so that we can understand. This is the date, December 10th. And then we're going to go into here and we're going to go look at December 10th. Let's see what we come up with. So here we are at December 10th. Now, by utilizing the same strategy on December 10th and utilizing this bar, this would have got you in at 167, which would have roughly got you in at the same exact price as waiting for this confirmation. So here's an example where waiting or using this hour strategy didn't really add a lot of value. What it did do was give you confirmation. And the hourly gave you confirmation by its pattern. So for those that have watched the other videos, you can see clearly how you've broken down here, and this becomes our flagpole, and this becomes a bear flag. So now that we know that we have a bear flag on the hourly, even though we entered here, if we were doing multiple time frames, if we were just looking at the daily, we wouldn't even know that this is a bear flag. And how were we rewarded the next day for that? Well, we were rewarded with this. And we can see how this continued to trend down. And then you can just very simply from that entry, just do something very simple as just look at a channel, right? And you can see that channel and how the trade would have played out based upon that. Let's take a look at another one. So here we are with Tesla. Now, what do we have here? We have a downward trend, because you know you're not going to know all this to the right yet, right? We're aware of that. So you're not going to know that at this particular time, what's going to happen 2 weeks later. So here you come down and you close right under it, okay? Bounce over it, but you don't break that neck level, do you? And you can see this very clearly on the 10th, right? Look at this level and look how perfect it is. This is why it's important when you use this EMA trading strategy that you utilize these other lessons that you've already learned. Because you can see that you wouldn't be concerned if you knew this level was there, even as this traded against you after closing on it or entering it here. Now, whether you entered at this particular time or you waited for the next day and confirmation here, it still provided data. It still showed you that you're okay with your trade, and it showed you that you're okay entering here as well. And then here becomes your bear flag again. So what you're doing here is you're utilizing the 50-day EMA as absolute confirmation after you've utilized your support and resistance lines, after you've utilized your trend lines, and your recognition of candlestick patterns and multiple time frames. So you're putting it all together and you're getting yourself into a position where you can utilize that to have a high degree probability trade. These concepts that we're going to start putting out are going to start getting deeper and deeper. So make sure you're caught up on the previous videos, the previous educational videos that I posted. I know there's several of them. Make sure you catch up on them on the key topics so that you're aware. Thank you for watching this. And I do want to make more videos more often. So please comment and like and let me know what type of videos you want to see. Until the next installment, everyone trade sharp.